Hi, this is Nikki. Hindalco has reported a net profit which is up by more than 23% sequentially, way higher than what the street was estimating clearly. But how sustainable is this performance? Let's find it out from the managing director of the company, Mr. Satish Pai. Hello and welcome to BloombergQuint. So I'm going to start off by asking you about your aluminium business performance. The EBITDA there is at all-time high level. Uh, what kind of growth can be expected going forward in Q3, the demand situation and the cost pressures for the division?
So I think that we are going to see fairly steady LME levels because the supply and demand is quite tight. It's true that the LMEs have come off the highs of 3,000 and are at the 2650, 2700 range. But I think the aluminium levels or the LME levels are going to be steady. The demand is extremely strong. In fact, the world markets are in a deficit. And it's also true that cost inflation has started to pick up. And I think Q3 to Q2, our costs are going to go up by around 8%. So in short, I think that we are going to have good results, but probably the margins in Q3 compared to Q2 could be slightly lower depending on the level of LME because the input costs have gone up.
Okay, what kind of moderation can we expect in the margins, so to say? And you feel that the LME prices could correct going forward with the given liquidity conditions that we're sitting at? Your view?
No, I think that this the liquidity impact on the LME price has already happened. The market has already factored in because the Fed has been talking about the tapering for quite a while now. So if you see that the LME went down from 3,000 to about 2,500 and has now started to climb back up and is at about 2,650. So I do not expect any more impact on the LME from the sort of Fed tapering or the tightening of the monetary situation. I think the supply and demand of aluminium and the demand for aluminium is going to drive it. So I think that the LME prices are going to stay firm. And if that stays firm, the margins are going to be good. Now, exactly how much will it be compared to Q3 depends on what the LME ends to be, because Q2 was at about 2648 LME. Today we are running at 2650, 2675. So the margins could be slightly lower, but not much.
Okay, because you also said that there are the cost pressures are adding in, at least with the lagged impact, Q3 could feel the impact. I also wanted to touch base about the Indian aluminium production, cost of production. Do you think that's peaked out? If yes, when would we realize the benefit of that? Because coking coal cost, and the CP coke cost all across the globe, you've seen those easing of the raw material prices right now. When do you think that will be reflecting into the margins of the company?
I think that, there is always a lag. When the prices go up, you procure, and then by the time you use it. So I think that the peak of the pricing could be this quarter three. And you, as you quite rightfully said, the input costs have started to now taper off. So difficult to say because market conditions remain volatile. But I believe, like you said, that the prices are starting to come off the highs. International coal prices have dropped sharply. They'd gone about $200 and are now back to 140 type of levels. So I think that maybe Q3 is going to be that peak from a cost point of view.
And the impact of which, or rather the benefit of which, would be realized on the margins in Q4, right?
No, I think because most of that peak prices happened during September type of time frame. So I think in quarter three, which is October, probably we did not see that much, but November, December, you will start to see the impact of those higher costs.
So just to get that right, sir, what I'm trying to understand is despite the cost pressures coming off, you still are expecting a slight level of moderation in your margins. Have I got that right?
That's correct, because, I think that operational efficiencies also count. And we are just coming out of a monsoon quarter. And normally the October, November, December, and the January, February, March quarters for Indian manufacturing are the best quarters of the year. And when all the plants are working at full capacity with full operating efficiency. So I do believe that from the costs will be going up, but your operating efficiencies will mitigate it to some aspect. But let me be clear, the margins will get impacted in Q3 because your input costs have gone up. But I guess what I'm saying is I hope to mitigate some part of that through operational efficiency.
Sure. Could you quantify the amount of moderation and margins that we can
No,
expect in terms of basis points, or for that matter percent, a broad-based direction that can be given?
no, I don't want to sort of give you forward-looking margin predictions.
Okay, I'm going to be quickly checking on your coal sourcing mix then, because what's the percent that can be expected in Q3? How do the numbers stack up in Q2? How different they're going to be? A ballpark
They're
understanding?
not going to be very different. We get about 95% of the coal between our linkages and e-auctions, and about 5% from our own coal mines. And I think that in Q3, the mix will be the same. And I also think that, the tightness that we saw during the sort of August, September months when the independent power producers started to run short of coal, that situation is starting to ease out now as the production levels from Coal India have also gone up. So I do believe that in Q3, the availability of coal will be much easier.
Okay. Okay. Both your upstream and your downstream business now have been doing typically well, but I would understand from the volume perspective, specifically that from Utkal. I think there is a sharp jump when it comes to the sales volume from Q2 as compared to Q1, but I guess the third party sales haven't kicked in as yet, right?
So I think first, Nikki, the aluminium sales were 338 KT versus 303. And if you remember last quarter, I told you that 10 KT on a ship was at the end of the quarter and could not be booked. So the real metal sales this quarter is 328 KT. So that's one point. The second point is, have we started third-party sales from Utkal? Yes. In Q2, we sold about 30 KT because the ramp up happened during July, August, September. The good news is that it has ramped up to its full capacity. And during the second half of the year, we'll probably be selling about 150 KT in the third party market for aluminum.
And overall, you expect the sales to be how much higher in the second half from Utkal?
Now, as I said, we'll be selling 150 KT during the second half. And
Okay.
in Q2, we sold 30.
Okay, that's a significant jump given the ramp up of capacity. Copper division EBITDA performance, because that is also up by 22% year on year basis. How sustainable? I beg your pardon. I'm talking about the copper division, which is up as much as 45% year on year.
Yes.
What explains this, and also what can be expected going forward?
So if you remember, Nikki, I mean, our copper division, we were, for quite a few quarters, we were going through operational issues. And we finished a couple of big shutdowns. And I had promised that once the shutdowns are over, the operational performance will get steady. So I am happy to say that the copper division now is operating in a very steady way. The production levels are per quarter 100 KT. And I think the impact of steady operations is being seen in the results of the copper. And also have to admit that the sulfuric acid prices have been very strong. So the byproduct realization from copper is also good. That's why you see the 350 crore EBITDA in the copper business.
And do you expect some amount of moderation coming in?
No, I think the copper business should be at that level Q3 as well.
Okay, Novelis has been doing exceedingly well. Quarter after quarter, we've been talking about how sustainable the margins are going to be. 550 seems to be like the new normal, for Novelis division. Where is the demand coming from? Which is the pocket which is contributing the most? And do you think a further acceleration to the margins from this?
So again, I'm not going to give any guidance on the margin, just to say we expect it to stay strong. But I think that the can sector is extremely strong. I mean, driven by sustainability measures. Most of the new beverages in the US are coming in aluminum cans rather than PET bottles. So can demand is extremely strong. The specialties, which is the industrial sector, consumer electronics, housing, is extremely strong. The aerospace has started to pick up. And the only sector that has got some impact is the auto because of the semiconductor shortage. But overall, the end markets of Novelis are showing very strong consumer demand.
But isn't auto sector a challenge even for Indian markets as a whole? Or are they not tapering into the demand
It
overall?
is, but in India, we don't sell too much into the auto sector because the Indian auto sector is not using aluminum sheet to a large extent yet. So our Indian aluminum business is not that badly impacted. But as you can read in the media and the press, Indian auto companies are also seeing that impact of the chip shortage.
Sure, I understand that. I'm going to touch base quickly on the balance sheet side and the working capital bit. Standalone operations have seen a negative cash flow due to the amount of buildup that we've seen in working capital. What kind of release are you expecting in the second? What kind of release of working capital are you expecting in the second half of the financial year?
So first is you have to understand why that block is coming. That block is coming because the copper prices are at $9,500. So when you buy copper concentrate and the 3 months it takes to process it, the working capital block is high. So, but it is not a source of concern because it's a very cheap financing we get for that working capital fund. Now, will the situation ease out? Absolutely, because now copper prices are flattened. So there is going to be no additional block. And we believe in the second half of the year, you will see a release of that working capital that's blocked.
To what extent, sir?
I think, we should see quite a large part of that working capital block coming off. I mean, normally we should be generating 3,000 crores of free cash flow after capex and all that. I think you will see that in the second half of the year.
Okay, fair point. Talking about your hedges, what are the what is the quantity? What are the prices H2 versus H1 comparison?
There's no change. I mean, whatever we had hedged in 1st April 2021, we have not added to that position at all because, in a sort of an upward moving LME market, it doesn't make sense. So our old last year's hedge position, we retained that. So we had about 30% hedged at 1900, and we are, not touching that and not adding to that position.
Mr. Pai, any comments for the investors or the viewers who will be watching this interview? And at the same point of time, I'd like to highlight your net debt to EBITDA has come down substantially. What can be the growth part going forward, and what is the kind of demand that we can now look at with the entire non-ferrous pack? That's quite a broad question that I'm asking, but there is this whole bull run that we witnessed entirely in the metal space. What's your assessment of the whole cycle right now?
I think that, I'm going to talk from a non-ferrous point of view and take aluminium and copper. I think from a very macro level, these are two metals that have a big role to play in the whole green drive that's there in the world. Aluminium because it's a highly recyclable. Uh, it is used for lightweighting electric vehicles, and copper because of the whole electrification drive. So I think from a macro level, if you take any investor or looking to invest in Hindalco, aluminium and copper are going to see a very strong demand pattern over the next 10 or 15 years. And I think that companies that can provide aluminium and copper products, and especially value-added products, are going to see a good demand for their business. So, which is why I think that Novelis and Hindalco are well positioned in this sort of a macro environment that we are in.
All right, Mr. Pai, we'll leave it at that. Thank you so much for taking out time and speaking to BloombergQuint.
Yeah, thank you, Nikki.
All right, thank you, guys.